Lease accounting under FRS 102 is coming, and the clock is ticking. Welcome to Lease Solutions Pro, your partner for practical, real-world compliance. We've helped UK finance teams and accountants navigate IFRS 16, and now we're here to guide you through FRS 102. In this video, we'll walk you through our transition checklist, a step-by-step plan to help you get ahead and stay compliant. Let's dive in. Initial assessment and scoping. To start, it's crucial to fully understand the lease accounting changes introduced by FRS 102 and determine how they impact your organization. All qualifying leases are now coming on balance sheet, so you'll need to get familiar with the right-of-use asset model. These changes apply to accounting periods beginning on or after the first day of January 2026. You will need to look at your lease portfolio, identifying all leases that fall within the new requirements and assessing the total volume that needs review, making sure you also consider potential embedded leases. Your transition timeline is critical. It will be based on your year-end date and will be pivotal in determining your opening balance on transition. From there, evaluate the best approach to managing compliance, whether through spreadsheets, specialist lease accounting software, or outsourcing to an MSP, managed service provider. Additionally, consider the volume and complexity of your leases, the likelihood of regular modifications or remeasurement, and, crucially, the level of expertise and resources available within your organization. It's also essential to determine the appropriate discount rate, such as the incremental borrowing rate, and ensure this is validated with your auditors. Finally, assess the broader financial impact of these changes and any potential compliance risks to help you prepare for a smooth transition. Review your transition options carefully and be clear on how you'll handle the post-transition accounting, especially how your opening balances will be recorded under the new standard. And don't overlook tax. Fully integrate it into your solution from the outset rather than treating it as an afterthought. Building your project team. A successful transition relies on involving the right people early in the process. This isn't a one-person job. Identify key stakeholders across your organization, including lease managers, finance teams, and the tax department, as well as external auditors. If you are considering third-party software or MSP outsourcing options, be sure to engage IT and legal teams as well. Consider whether a dedicated project team is necessary to oversee the transition and ensure responsibilities are clear. Early-stage training on the lease accounting changes will be valuable for those involved. Before engaging auditors, conduct an internal review to identify potential issues and ensure a well-prepared approach. Selecting your solution. Choosing the right solution for lease accounting compliance is a critical decision. There are several options. Spreadsheets. These can work for smaller lease portfolios, but they must be rigorously tested to ensure accuracy, resilience, and future-proofing, especially as lease changes are inevitable over time. Specialist software, purpose-built lease accounting software, is compliance-tested, scalable, and designed to simplify the process. Outsourcing to an MSP, this option provides expert handling of compliance and reporting, ensuring accuracy and minimizing manual effort. Integrated accounting modules. Some ERP systems are expanding their capabilities to include lease accounting, which may be a viable option for businesses already using these platforms. When selecting the right solution for your business, it's crucial to look beyond the initial transition and consider the future scale of your lease portfolio. Experience shows that the real challenge lies in managing ongoing lease changes, remeasurements, and modifications, which create continuous compliance demands. Specialist software is built to handle these complexities effectively, but implementing it post-transition can be more challenging without aligning right-of-use carrying values from the start. Before committing to any solution, perform a cost-benefit analysis to ensure it aligns with your needs and resources. Implementation planning. Once your solution is selected, a structured implementation plan is essential. Define clear milestones and deadlines to keep the project on track. Train relevant staff on their specific roles and responsibilities, ensuring they understand their part in the compliance process. Effective communication with stakeholders is key. Keeping everyone informed will help manage expectations. Lease data must be collected and organized in the correct format to ensure accuracy and completeness. As you configure your chosen solution, validate compliance outputs to confirm accuracy. Finally, review lease accounting reports and disclosures before finalizing them to ensure they meet reporting requirements. And don't forget, your planning should also include firm processes for post-transition compliance. The transition itself is just the beginning. Ongoing accuracy and control are where the real work continues. Data management best practice. Good data equals good compliance. Validate regularly, document everything, organize consistently, and make sure you capture every lease. Sloppy data means trouble down the line. As you collect lease data, make sure to check each agreement for key milestones. Things like renewal option dates, rent reviews, and break clauses. These should all have dedicated fields in your data structure. And don't stop there. Think about other important management fields too, such as a clear lease description, vehicle details, and registration numbers. Especially if you're using the VIN as the unique identifier for vehicle leases. The goal is clear, complete, future-proof data. Post-transition, monitoring, and compliance. FRS 102 compliance isn't a one-time project. It requires ongoing monitoring. Establish a routine for compliance reviews such as monthly lease assessments to ensure continued accuracy. Establish controls to manage lease modifications, terminations, and rent reviews in a structured way. Ensure lease accounting data integrates seamlessly with your financial reporting systems to avoid manual workarounds. Maintain a clear audit trail for all lease changes and policy updates to support future audits. Lastly, stay informed about regulatory changes that may impact lease accounting and adjust your processes accordingly. Let's talk about a few key success factors. First, start early. Even 6 months ahead gives you a serious advantage. Second, involve your key stakeholders. Success rates jump to 75% when all departments are engaged from the beginning. And finally, with the right system, you could triple your reporting speed and cut costs by up to 40%. Look, lease accounting under FRS 102 isn't going to fix itself. But with the right plan, the right tools, and a bit of teamwork, you can turn it into an opportunity instead of a compliance headache. If you found this video helpful, give it a like and subscribe for more practical lease accounting content. And if you're ready for a deeper dive, sign up to our Lease Accounting Solutions Knowledge Hub. We have created this hub to give you a full transition roadmap, expert insights to avoid costly mistakes, and powerful tools to simplify your compliance.